Don't you find it strange? Inflation is at 8%, gas prices are up 30%, food costs have jumped 40%. But gold, what our grandparents always called the inflation hedge, has only risen 1%. Has gold died like ancient treasures? I'll tell you straight, this story isn't that simple. Behind gold's strange silence is a massive game that 99% of people have no idea about. A game controlled by those who hold global monetary power. Today, I'll reveal the secrets the system doesn't want you to know. Why is gold being chained down? Who's manipulating gold prices? And why, despite gold not rising, are central banks secretly hoarding gold like crazy? After watching this video, you'll never look at the gold market the same way again. Listen, to understand this story, first you must face this brutal truth. Since 2020, cumulative inflation has exceeded 80%, but gold has only risen 20 to 30%. Meanwhile, home prices in major U.S. cities like San Francisco and New York have jumped 200–300%. Stock indices have gained 150%. Don't you see something wrong here? Gold, supposedly the store of value, is the slowest rising asset on this list. Financial experts on mainstream media will tell you gold is no longer relevant. In the digital age, gold is obsolete. Bitcoin is the new digital gold. But what's the truth? The truth they don't want you to know is gold isn't dead at all. Gold is just being systematically controlled. And the tighter the control, the more it proves how terrifyingly powerful gold really is. Do you know where most of the world's gold prices are determined? Not at jewelry stores, not at banks, but in the futures markets, where they trade paper gold. Imagine you're playing a game where 100 people are bidding on a cake, but there's actually only one real cake. The other 99 people are bidding on cake certificates. Who will determine the cake's price? The person holding the real cake or the 99 people holding paper? That's exactly the reality of today's gold market. Every day in the futures markets, over 300 tons of paper gold are traded, while global real gold mining produces only 10 tons per day. That's a 30-to-1 ratio, meaning for every 30 ounces of paper gold, there's only 1 ounce of real gold. Whoever controls the big money flows in the paper gold market determines gold's price. How does this manipulation work? First, they create selling pressure at crucial moments like before inflation announcements or Fed meetings. They dump massive sell orders for gold futures, creating the feeling that the market doesn't trust gold. Next, they control psychology through coordinated media declaring gold is obsolete, encouraging investment in stocks and bonds, creating more attractive alternatives. Finally, while gold prices are suppressed, they secretly buy physical gold, moving gold from west to east, preparing for the next phase. The main culprits are those capable of moving billions of dollars easily. The world's largest banks that can place sell orders for 50 to 100 tons of gold futures in just minutes. Currently, we're living in two parallel gold markets. The paper gold world trades on futures exchanges, requires no physical gold for trading, has enormous volume, cheap prices, and is easily manipulated. The physical gold world, however, is increasingly scarce, has real demand from nations, is hard to manipulate long term, and has genuine value. Have you noticed these strange phenomena? In the US, American Eagle gold coins often trade at $100 to $200 premiums over spot gold. Even when world gold prices don't rise, physical gold remains scarce domestically. Coin dealers often report out of stock when world gold prices drop. In international markets, major banks report insufficient gold for delivery. Gold delivery times are increasingly extended. Gold storage fees are rising abnormally. These are signs that physical gold is gradually decoupling from paper gold. Why do they need to control gold prices? Think about it. If gold rose according to actual inflation, what would happen? People would rush to buy gold instead of holding dollars. The dollar would gradually lose its reserve currency status. The central banking system would lose control. Confidence in paper money would collapse. Therefore, controlling gold prices isn't just about profits, it's about the survival power of the entire current monetary system. Here's the strangest thing. While media continuously says gold is obsolete, central banks are secretly buying gold at record pace. In 2023, central banks bought 1,037 tons of gold. In 2022, they bought 1,136 tons. In 2021, they bought 650 tons. That's 400% growth in just 3 years. China is the hoarding king, increasing gold reserves for 18 consecutive months from 1,948 tons to 2,235 tons, aiming to reduce dollar dependence. Russia implements de-dollarization strategy by selling all U.S. Treasury bonds, increasing gold reserves from 500 tons to 2,300 tons, using gold for international payments. India, Turkey, and Poland have increased gold purchases 200 to 300% compared to before, preparing for a post-dollar world. Do you think the world's top economic experts are foolish enough to buy obsolete assets? The truth is they know something you don't. Gold is the ultimate asset. When everything collapses, only gold and land retain value. The current monetary system is unsustainable, with global debt at 300% of GDP and uncontrollable inflation. A currency war is happening. Whoever has the most gold will have a voice in the new financial system. Gold is geopolitical insurance. No one can freeze gold like freezing bank accounts. They're secretly preparing for a world where the dollar is no longer king. And in that world, gold will be king again. Many think Bitcoin will replace gold, but is that really the case? Bitcoin is easy to trade and transfer, isn't controlled by governments, but depends on electricity and internet, has extremely high price volatility, and hasn't been tested in major crises. Meanwhile, gold has 5,000 years of history as currency, is a physical asset that can't be hacked, remains stable during crises, but is hard to transport and store, and can be confiscated by governments. The reality is gold and Bitcoin aren't competitors, but complement each other. In a major financial crisis scenario, Bitcoin will fluctuate wildly, like all risky assets, while gold will be the safe haven. In war or geopolitical crisis scenarios, Bitcoin could be shut down by internet blackouts. Gold still retains value and becomes the ultimate payment method. In hyperinflation scenarios, both Bitcoin and gold will rise sharply, but gold rises more steadily. Bitcoin rises faster, but with higher risk. Based on cycle analysis and central bank behavior, I predict that from 2025 to 2026, gold prices will remain suppressed. Secret accumulation continues. The gap between paper and physical gold widens. From 2027 to 2029, major financial crisis occurs. The paper gold system begins to break. Gold prices explode to $3,000 per ounce. From 2030 onward, a new monetary system is established. Gold becomes part of an international currency basket. Gold prices stabilize at high levels. Now you understand why gold doesn't rise with inflation. It's not because gold is dead, but because gold is being systematically controlled. Don't focus on short-term prices because gold is a long-term asset, not a speculation tool. Prioritize physical gold, avoid paper gold products, and gold ETFs. Buy regularly. Take advantage of suppressed gold prices to accumulate. Diversify because gold is only part of a wealth preservation strategy. For low-income Americans, buy gold coins and small bars regularly. Accumulate 5 to 10% of total assets in gold form. Consider it insurance against inflation. For middle-income earners, combine physical gold and Bitcoin at 70% gold, 30% Bitcoin ratio. Learn about silver as an alternative. For wealthy individuals, research international gold. Consider storing gold in multiple countries. Monitor central bank policies. Watch for early warning signs of gold explosion. When major banks report no gold available for delivery. When the gap between paper and physical gold becomes too large. When there are rumors of global currency reset. When inflation exceeds control. Times to increase gold purchases are when media attacks gold most aggressively. When gold prices drop sharply for no reason. When countries increase gold reserves, when geopolitical tensions escalate. Now you understand why gold doesn't rise with inflation. This isn't a natural phenomenon, but the result of a carefully calculated game. Those in power are controlling gold prices through futures markets, creating paper gold to deceive people, secretly hoarding physical gold for the coming currency war, preparing for a completely new financial system. Meanwhile, they want you to believe gold is obsolete. Put all trust in paper money, invest in assets they control, become slaves to the current financial system. Those who understand this game will have huge advantages in the next 10 years. They'll preserve wealth when crisis hits, capitalize on opportunities when gold explodes, Not depend entirely on the banking system. Have tickets to the new financial system. Don't let them continue to deceive you with fake numbers in futures markets. Gold isn't dead. Gold is just imprisoned. And when it's set free, gold's true power will be revealed. If you found this video helpful, please share it to help awaken more people. Don't let them continue deceiving us about gold's true value. Remember, in the coming currency war, gold won't just be an investment asset, but a weapon to protect your financial freedom. Wake up before it's too late.